Hi, I'm Chris Brecher. Welcome to another 3-minute learning series. Today we're talking about one of my favorite candlestick combinations, the Doji followed by a bearish follow-through candle. This simple two-bar setup can warn you that a trend is ready to roll over. A Doji forms when the opening and closing prices are almost the same. I talked about that on a previous video. Looks like a cross or a plus sign. It signals indecision, but on the way up after an extended up move, it signals exhaustion. Buyers and sellers are battling, but no one's winning. On its own, it's neutral. The magic comes from what happens next. This is what I want to show you. If the candle after the Doji is a strong red candle that closes near its lows and ideally breaks below the Doji low, that's called a bearish follow through. Now, there are other ways to do it, and I'll show you what we're talking about. So, number one, Carvana on the left, it was a beauty. The rally up, the exhaustion culminating in a Doji, and the red follow through candle. Now, it's interesting. I was testing this video yesterday with the Chart Patterns Mastery. And what's fascinating here, I was showing them a scan and CRISPR Therapeutics showed up. What did you get? You got a Doji on the right. And I'll show you without some of the moving averages as noise. And as you see, you had a Doji on the right and then a follow through candle yesterday. And the key is most people are like, oh, I missed it here. That is 5 points. Holy cow. And I want to show you a couple of other things when it comes to this. One of them, there's two kinds of follow throughs I like. One of them is this. When you get the Doji and the red candle after an extended move up, no doubt. The other one is after a sell-off and you get a consolidation and you get an overbought that culminates in a Doji. So if you take a MACD on the bottom, you'll see the overbought condition right here. You'll see the overbought right here. And there it is. It culminated in a Doji. So a lot of times in a temporary downtrend, as I like this stock long term, but to get that follow through, you don't know if it's going all the way up to here. You're looking for the indecision and the sell off. Now, what's exciting in here is go put CRISPR Therapeutics up again, because you're going to say, well, maybe all it did was you were lucky. Go and put a 5-minute chart. Holy cow, that's called a Brecher ledge. After the sell-off, you got a consolidation that culminated with a follow-through on the downside and then a horizontal line, a bear flag with a horizontal line. That is a ledge, a Brecher ledge. And as you see, the Doji worked great. In another video, I'll go through scanning for these, but right now I wanted to identify what they look like. Thanks for listening. Take care.